Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about premium decay, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy guys.
Are you going to see a big shift in premium decay for the next hour?
No, you won't see a big shift in decay in the next hour. Let me tell you the nature of it so that you understand that in the morning hour, it's really flat, the decay. It's steady, but it's flat. It starts picking up a little bit in the afternoon session, and then in the closing session from 2:30 to 4, it's like it falls off of a cliff. Particularly once you get to 3 o'clock, it really starts falling very quickly. But overall, you don't see a huge change. What you do see, though, in the morning session is a lot of price movement, typically.
Yeah, that's what we were talking about. It's a freaking P&L line. It's bouncing all over the place.
Yeah, and so that's why we're not just going after premium decay. Our trade has three facets to it, both the timing, the volatility, and the price change, because we are doing directional trades, and even if we don't take full advantage of the premium decay, we can take advantage of price movement. So you have to keep that in mind, but they're all playing together. Obviously, you can take advantage of all of them at the same time. Sometimes you have a chance just to take advantage of the timing and the price movement. For instance, in super low volatility, if it's early in the morning, you get a quick move into your butterfly and you have a lot of profit, that's a good opportunity just to take it, because the premium decay has already happened, or a large part of it has already happened. And now there's a slower gradual move to fill it up at the end of the day, but now there's increasing risk that you're not going to stay inside of the fly. As opposed to if you were in high volatility in that same situation, you're better off just staying where you are and not doing anything, because now the potential premium is much larger, the gamma risk is much lower, and there's a good chance that you have better odds waiting for the decay to take over as opposed to the price change. So in low volatility, price seems to be of a higher value, and in high volatility, time and premium decay seem to be of a greater value. The thing that there's another nuance to it, like you could be in relatively high volatility in the morning, and then you could get a volatility crush event like after a significant report or something, and then you get a rush of premium decay. That's why we trade the bath, because of that exact situation. Sometimes the price movement obfuscates the bath and forces us to stop out, which has happened, I'd say, 2 out of the last 3 BAF trades. I'm pretty sure that comports with other people's findings too.
Yeah, seems like it. I don't get in them very frequently, but just from what I've been watching.
So that's the real challenge of all of this, is that we're dealing with that's not a challenge. It's knowing where your edge is and what part of that edge is strong, what part is weak, and to what extent. So it's time, change in price, change in volatility. Those are our 3 primary edges. So just think about it. If you have 3 things that are somewhat related to each other, but they can also be independent, or one can be moving and the other one can be low and the other one can be early or late. So you have a lot of different situations.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.